Business time then with Will. He's here with us once again. We're going to kick straight off with the markets, aren't we?
Yeah, that's right. It's not been a great day so far in trading over in Asia on the markets. That is, of course, off that news from China yesterday that their forecasts were lower than we were perhaps expecting, 7.5% growth for next year. Good news anywhere else, but for China, that's a bit of a disappointment. So as you can see there, all the figures quite firmly down in trading at the moment. There was also disappointing data from the EU on Monday. Business activity fell back into contraction for February. Spain and Italy, the worst performers there, so that didn't help matters either. Leading the falls in Asia are steel makers and commodities producers such as oil companies as well, because any boom in China really helps their balance sheets, and similarly, any disappointing figures for China hits them hard.
Well, we've also got friction between the US and China. It's set to continue after a vote on tariffs in the US Senate on Monday.
Yes, the US Senate has voted to continue with tariffs, which in a different form were ruled, well, essentially illegal by the US Court of Appeals. But this is one of the few things these days that can get bipartisan support, really, in the US Congress, because China-US trade has become a real issue, not only in the Republican primaries, of course, Super Tuesday, we're going to be seeing later on today, but across the board with President Obama saying that the currency that China has is being kept artificially low, thereby helping their exports. So these tariffs, which are now being kept in place due to this bill, which went through the US Senate on Monday and is expected to go into law, that is going to put new tariffs, well, continue with the tariffs on paper, on aluminium, various chemicals from China, and also plastic shopping bags from Vietnam.
Interesting stuff. Now, next, Europe's car industry. They're hoping to get a boost this week as the Geneva Motor Show opens its doors. While premium manufacturers are doing well, mid-range brands such as Opel, well, they're struggling. They'll be hoping a Car of the Year award will help their sales, but big changes may be required to turn things around at the company, as Ben Barnier explains.
Car of the Year at the Geneva Motor Show. The Chevy Volt, a plug-in hybrid car, offers a range of 500 kilometers.
I will tell you that the world needs electric cars, especially those that deliver zero CO2 emissions.
But the Chevy Volt has yet to draw customers. Disappointing sales have led GM to slow down production of the Volt and of its European version, the Opel Ampera. Like Opel, other mid-market car makers in Europe, such as Peugeot, Renault and Fiat, are losing ground. These companies are squeezed between cheaper cars, such as Hyundai, and high-end market products, such as BMW, Mercedes and Audi. In January 2012, the West European car market fell 7.9% compared with a year earlier. Last week, GM said it would take a 7% stake in Peugeot Citroën for 320 million euros. The companies hope to lower their costs by sharing production units. But more radical steps might be needed to restore profitability, including closing plants.
And still, while there are worries about the GM factory in the UK there, the country's manufacturing industry has got a little bit of a boost. This is from Nissan.
Yeah, they're expected to announce later on at the Geneva Motor Show they're creating 2,000 jobs at their factory in Sunderland in the UK. They're going to be building a new compact model, it's thought, up there with an investment of around 150 million euros. So that is good news. Of course, the business secretary from the UK, he's over in Geneva to have talks with General Motors executives about that potential closure of a factory elsewhere in the UK. So a bit of good news for them, at least there.
And it's not just the car industry that's struggling. We're going to have another look at a sign of the times. I thought this was about fruit an hour ago. We've established it's nothing to do with fruit. This is about the high street.
Yeah, women's fashion, neither my strong point nor yours, Stuart, I suppose. But Mango, the the high street fashion brand, they have said they've got 2,500 stores across 100 countries. They've said that they're dropping prices by 20% across the board on average, and they say it's not because they're having trouble with sales, but just because of the general effects of the financial crisis. That's what they claim anyway. They say that their sales figures are going to be strong when they are released later on in the year. So it's an interesting result of the financial crisis, and maybe a sign perhaps that the high street is reflecting the wider austerity sort of atmosphere that's pervaded much of Europe at the moment. Having said that, though, there were retail sales figures released yesterday that showed an unexpected rise in consumer spending across the EU as a whole, with particularly Eastern Europe seeing double-digit improvements In France, it was up around 6%. So perhaps some good news for high street retailers there, but that's yet to kick in, really.
Excellent. It's a bit of a squeeze on mango. See what I did
Very
there? Terrible
good.
pun. I do apologise. So retailers then facing pressure on the high streets could face pressure though from their suppliers as well.
Yeah, this is because of cotton, the price of cotton. Now, last year we saw record prices on the cotton markets. That was down to the fact that India banned cotton exports. Now it's done it again. Why has it done this? A lucrative export like cotton, why would it not want to sell it? Well, it says that it has to think about its domestic producers first. Of course, they have to buy enough cotton for their own manufacturing purposes. And for that reason, India says that there's not enough to export at the moment. So the last time it did it, it saw a record prices on the cotton markets. China has started stockpiling, in fact, to ward off fluctuations in the price of cotton. So we could be seeing higher prices there again in the future.
Okay. Now, next, Iceland, one of the countries worst hit by the financial crisis when its banking system in Iceland collapsed, taking down the rest of the economy with it. The Prime Minister at the time, well, he's now on trial for his role in the financial disaster. He says, though, he can't be held responsible for the actions of investors. Kate Moody has more.
Iceland's 3 major banks collapsed in the fall of 2008 and were later taken over by the state. Then Prime Minister Geir Haarde denied that the ensuing crisis was his fault.
I cannot take responsibility for the global economic crisis. I can take responsibility for the actions of the governments that I have been involved with in terms of policy, but I cannot take responsibility for the actions of the commercial bankers.
He again rejected responsibility on Monday in court, where he faces charges of gross negligence. He told prosecutors he didn't know the banks were on the verge of collapse and that he did everything possible to prop up the economy. Some politicians who fought to bring Haarde to court have now changed their minds about his responsibility. Haarde resigned in January 2009 amid mass public protests, as Iceland was forced to take bailouts from the International Monetary Fund and its Nordic neighbors. Its krona currency lost about 60% of its value in the crash and has not recovered. But other parts of the economy have started to rebound. Unemployment levels have dipped, and Iceland's debt rating was lifted out of junk status by the agency Fitch. And the IMF estimates that gross domestic product will expand more than 1% this year, far stronger than the Eurozone.
And finally, continuing our run of terrible puns, there's a bit of a battle brewing in the coffee market.
Yes, there certainly is. George Clooney could be getting a bit of a run for his money with news that Starbucks is planning to move into the capsule coffee market in Europe in the coming weeks, potentially in this month, in fact, according to the Financial Times. If Starbucks does move into that market, of course, the main contender in Europe at the moment is Nespresso. They pioneered this sort of system of having coffee in capsules for their own branded machines and making a very good markup on it to 20 or 30%. So you can see why Starbucks will be keen to get a piece of the action.
I'm not keen myself. I prefer a proper cup. Can't face those little ones. All right. Thank you very much, Will. William Evans here with the business. More from him in just over an hour's time. Latest news comes up after the weather here on France 24.